yeah, let's get into the monthly. So here's a monthly candle. People have been talking, and I'll agree, guys. The chart does not look good. There's really nothing to go on. There's really nothing to go on. We sold off to 30. We're just consolidating. But there are a few little pieces of information that most people aren't looking at. So here's one of them. On the monthly, we see right here. This is the 10 moving average on the monthly, not talked about a lot. But if you look back at Bitcoin's history, it has played a role in both the bear and bull markets. In the rally of 2015-16, we can see that this 10 monthly actually led the way. We see 2 touches here as wicks, and then we see what happened last month, a wick to the 10. Staying above this level would be amazing. It'd be amazing. We don't really have too much there to go on. If we look at the monthly momentum on the MACD, we see May did, in fact, close with waning momentum. That's not a great sign. June has really got to see some buying pressure come in from somewhere, to keep this rally going. But that 10 monthly, man, no one's looking at it. It's a nice little gem. You guys know we are the cutting edge of technical crypto analysis here. Always striving to be ahead of everyone else. And this is our little edge here. Currently, that 10 moving average on the monthly is at 34,000. So ideally, I'd like to see June stay above 34,000 at least. Oh, that's what I'd like. Downside targets below get pretty easy. We've gone over these on a few streams here. We can go over them really quick. We have very simple targets to the downside. 24,000. We can call it 25,000. First downside target. Why? Well, we have on the, I believe it's on the weekly, the 100 weekly. We have support there from moving average, a major one. However, what it really is just the same retracement level, the same retracement percent that we saw in March 2020. So if we take that high, take that low, 63.34. We do the same here. I goofed that up. We do the same here, and we get, well, roughly that same level. So that is really the main reasoning for the 25,000. It's also a psychological level. So just extra power there. We have the previous all-time high at 20K. Everybody knows about that one. 13,800, a long-waited number that never came. As we exited the bear market into a bullish trend, we never came back to test this as a monthly support. You can see it was a major player in the 2019 bull trap, we'll call it. And below that, there's really only one other value. That's it. Let's grab it right there. 10,500. This was pivotal in the last few years. This area acted as resistance over and over and over again. We had a double top from October 2019 and February 2020, right before we led into the March COVID crash of 2020. Important level. Super important. In fact, unlikely to ever break, in my opinion. I don't see that level ever breaking. There's just entirely too much traded volume. There's too many people that would be interested in buying at that level. Since we've had this sell-off, I even said it on across the blockchain when I was on with BitBoy and Hashatoshi, can't say his name, Rice and Crypto Jeb. Man, they asked about a dead cat bounce. I said, I don't think we've seen it. If we are going to be dead cat bouncing, we haven't gone high enough. A dead cat bounce really needs to convince, at least retail, needs to convince actors that we are still in a bullish trend, that they should go long. We haven't seen it, and honestly, the longer that we don't, the more confident I am that we are going to break up from this consolidation period. But that is the level to me that is most important. This 30,000 doesn't bother me. If we fall down to 24, that doesn't bother me. What's going to get my ears perked up is that back test of the 20. If you look back at Bitcoin history, I think every single time price has fallen below the 20, it's come back to back test it as resistance pretty quickly. And when the 20 rejects price, that's when it can get pretty scary. Right now, this is just a really kind of unusually large sell-off. We haven't seen large retraces. Maybe this is making up for it. But the real battle for me is going to be seated right at this level up here. You can see it's just above price now. And really, that's it. There's really not there's really not a lot else. We have above us some weekly resistance here at 58,000. We have the all-time high seated at 64.9. We came a long way really quickly. And to see this rally cool off a little bit maybe is a better solution than simply continuing to run as we have. I guess something we should say too is it seems the words bear market have come around a lot lately. Too much. We've heard it too much from too many people. At one point last week, I think almost every YouTuber's thumbnail was like bear market. That's kind of I think that goes along even with what I was saying earlier. If we are entering a bear market, everyone wouldn't know. That's the difference. That's why I pointed out the 2017, 2018 sell-off is people didn't think it was the bear market. I know this might be hard to believe, hard to visualize for a lot of the new investors out there, but people legitimately were still 100,000% bullish. You had this sell-off and it bounced back up to 17. People were buying the dip. Man, I have not seen really anything about buying the dip on this sell-off. To me, that is bullish. It's not technical analysis. It's observational analysis, I suppose. But you can't have a bear market or a bull market. You can't have the start of those events with everybody in the right direction. If everyone decides it's a bear market, logically you would think, oh, well, then it'll be a bear market. That doesn't seem to be how it plays out. I don't know if that's manipulation, if it's the essence of Bitcoin, but it seems like when everyone's looking in one direction, similar to back in March, back in April, higher highs all day, every day, everybody was looking up, and guess what? We sold off. Bitcoin, I can guarantee this. I can't guarantee what direction it's going to go here, but I can guarantee this. Whatever you feel, you're likely getting baited. You're likely getting led in the wrong direction. So be wary. That's why this channel is all about non-emotional, logical, systematic analysis. That's what we do. We leave the emotions at the door. We get our math hats on. We get our chart hats on. And we take a look. Emotions never, in the history of Bitcoin, have ever seen emotions make the right trade. So keep that in your pocket. Brother, can you give your thoughts on staking alts and lending BTC in this part of the cycle? So yeah, absolutely. Great question. Lending and staking, I guess. Staking was around, it was around 2018. Actually, staking is a lot older than I think people realize. But the lending, at least, this is new. This is interesting. So right now, not great news, but right now, lending, APY for stablecoins, huge demand. There's been a huge demand for months, and that's why you see places like BlockFi and Celsius offering 8.6% APY on deposits for stablecoins. Why? Because there's a ton of demand to borrow them, buy crypto, then repay the loan. It's essentially using leverage to long. And as we transition, just because I don't think we're in a bear market today, doesn't mean I think we'll never be in a bear market. I think it's unavoidable. There's periods of expansion, periods of contraction in all markets. And when we see ourselves transition to the bear market, this could be a solid signal to look for. What you're going to see is that APY on stablecoins is going to come down. Unfortunately, this is what I was kind of interrupting myself a second ago to say. Unfortunately, I don't know. I just started using Celsius myself. I've been using BlockFi for months, but Celsius, I just kind of opened an account in the last month or two to check it out. Unfortunately, I have seen them go from 10% APY to 8.8. That's not ideal. We don't want to see APY dropping on stablecoins. That could be an indicator of the market sentiment. Why? Because if there aren't as many people trying to borrow stablecoins to buy, then there's less demand, and so the APY goes down. There's a little silver lining here, though, that I think everyone should be aware of, because this is something I'm looking forward to that is going to be a dramatic improvement versus the previous bear market. Is what we will expect to see then is the same as Bitcoin, or the same as stablecoins right now, have a huge demand for borrowing. We're going to see a huge demand to borrow coins in a bear market. So what we would expect to see is the APY on dollars to reduce, but the APY on crypto, on Bitcoin, on Ethereum, on Litecoin, on whatever you're lending, we would expect that APY to increase. So kind of a catch-22, maybe a double-edged sword kind of scenario. But I think that's going to be a game changer.